So this is the vlog for Monday, the 9th of July, 2018. And I'm going to go ahead and announce that, I wasn't really married to the name Type B Trading. Registered a website, talked with a friend about having some graphic design, and just never really resonated with me. So we are actually undergoing a name change. We are from now on Blue Heron Trading, and it's obviously it's symbolizing patience, waiting for the right opportunity, and then striking. So the website I'm building is blueherontraders.com, and so from now on, that's what this is. So the first vlog for blueherontraders.com, which is still non-aggressive and pattern day trading, is underway, and this is our first post-holiday week. We're still in that doldrum stretch that lasts through August. That's the slowest period of the market for the year. But we do have on the gap stock with about 12 minutes till market open. We have MetLife and we have AMD. So a couple we haven't necessarily seen with Met anyway. Micron's been popping on and off. It's got a lot of volume. It just isn't gapped quite enough. But I'm still looking at it on the watch list. Got a couple others that have been big movers, but don't necessarily meet the criteria volume-wise for my my gapper that I've at least got my eye on. We'll see if the volume picks up after open. Once open starts, I'll be looking at my my volume scanner and kind of seeing what else I can glean. But for right now, obviously we're hoping we have a better week than we did last week, and I'll come back later and let you know how it went. Okay, it's a little bit after 12 o'clock. We're going to go ahead and, unless something interesting pops up with volume later, we'll go ahead and call this. I say with volume. Volume is still kind of an issue, and it's going to be, like I said, really off and on, mostly on through the end of summer. So we did have a couple things we were looking at this morning, and as you can see, we really trimmed it down, which is exactly what we should do, to just a few stocks we were watching. I am getting a personal dislike for Micron, and it's really nothing to do with Micron. It's me. It's not you, Micron. It's me. I did an awful first trade. I will go in detail over it, but it was horrible. The second two trades I was involved in were both winners, but that's neither here nor there. Even if they had been losers, I traded them right. Micron, I traded wrong, and I actually missed out on what would have been a winning trade. So it was my first trade of the day, so we'll just kind of jump in right there. As you can see today, I had added that up. We came out to about 177 bucks after commissions. All right, not the worst thing. So let's look at Micron. So from the open, Micron started forming. I won't say it's a beautiful descending wedge because it's not. It's ugly. But it was definitely a descending wedge. And so I wanted my three confirmations. I had one here. Obviously, descending wedge, you're going to play the up. So I had one here. Here, again, yes, we touched, but we didn't go back up to that resistance line. We came back down. This counts as one in our rule set. So we had one, we had two, we did go back up to the resistance line, and then down here we have our third. Now, wedges and channels are tricky. They are what I call advanced patterns, and the reason for that is you can be in them, and even though the trade is still in pattern, it is encroaching ever more greatly on your stop loss as time goes on until you get that eventual break. And so really the way that you play wedges and channels is you do your entry, You will sell part out when you hit your resistance line, and if it is not obviously doing its break, you will close your position, which means you're limited to channels and wedges that actually give you enough of a range from your buy-in to your sellout that minus commissions you're actually going to see some profit. But that's what you do with wedges and with channels. You don't want to still be long when it starts its drop back. And what happened was I went in and I'm long, and it tested the support line, and then it went up just as it should, and it got to the resistance line, and as you can see with the tag line, this extended above the line of resistance. Now at one point I had this drawn differently where my line was sharper, and you know, neither here nor there. Point is, I kind of assumed, okay, I'm on my breakout, and I bought more shares. I think I was 400 at the start. I bought in another 400 right here. That is not our pattern. That is not our strategy, and Micron made me pay. So obviously it was not our breakout, and it kind of just skittered along the line of resistance. Had it just, you know, definitively gone down, I'd have just stopped out, which is what I should have done. I should have just gone ahead once I made that goof and cut my losses and got out. Once I bought up here with a slight profit, I should have said, whoops, wrong move, and hit the bail button. Did not, or we wouldn't have a story. Came down here. As you can see, I did go ahead and get rid, or actually no, excuse me, we came down here back to our original point. I actually bought more shares here, and it was actually, you know what, I think this was 400, this was 200, and here I made it another 200 to be in 800. I can't even tell you why. Finger twitch on the button? I don't know. At this point, I'm so far out of my... This would have been my logical get the hell out point. I'm so far out of pattern here. I jittered and bugged out and in the wrong mindset. And it dropped way down. And man, I mean, realistically, I should have stopped out here. That would have cost me an arm and a leg. And I waited for the price to come back up. What do we never do? We never wait for the price to come back. Oh my God. All right, so it comes back up here, and I actually sell out. I'm at this point, I'm just trying to plug the hole in the boat. I'm reducing my position size so that if it comes down, which I'm expecting it to do, I won't have to get stopped out for quite so much. We start playing around. We're skittering along the resistance line. I'm like, shoot, it's going to go. I caught myself. It's going to go down. It was a shoot. It's going to go down. It's going to touch the support line, and it's going to come back up. And I'm going to ride it the whole way if I stay here, and I'm not doing that. So as soon as, you know, it was just whatever, it kind of popped up a little bit. Oh, no, do you see what I did here? I bought in more. This is where I bailed right here. I bought in more here. I was out of this position. I was out of this stock right here. I was completely out of this stock. God, you'd think I would have this better in my mind. And I chased the trade. Oh, there's my break. That's what I've been waiting for. And I bought in more. And it came up here. Honestly, where I sold out, it was closer probably to over here. I did not make money on Micron. I lost right at 70 bucks. And I couldn't have been further out of pattern. These are advanced patterns, wedges and channels, because of the condition where they are constantly moving toward your stop loss until they break. And I treated it horrible. So I deserved every penny of that and probably more. Okay, but what do? We don't, you know, I played some music, I did some breathing, I started looking, and I found AMD. And AMD was making a symmetrical triangle. Now, triangles are not advanced patterns. They're the opposite. If you're in the right spot, they continue as long as they stay in pattern to move away from your stop loss. That's why I love triangles. Now, symmetrical triangles are what we call red-black plays because there's not a tried and true direction that you can be sure they're going to break. They do tend, in my experience, to be patterns that signal a continuation of the overall investor sentiment or trader sentiment, whatever that means. If the stock has broke up for the day, if it has gapped up for the day, even though we came down, I'm going back to the whole reason for this pre-market buy-up being good news. And it was. AMD was, you know, it's trade war stuff, whatever, but it was news-driven. And this is probably just profit-taking. So when I look at something like this, my inclination is to say it's going to break to the up. And so when you come down, you find your confirmation. So we would have 1, 2, 3, and well, no, we would not have 1, 2, 3, would we? Remember how this works? We have 1, we go back up. We have 2, we didn't go back up. This is all 2. We come back up, and then down again is 3. So now I'm going to buy in long. So you'll notice I actually bought in 3 stages, and that's because AMD is a very cheap stock, and you know, but it's got a decent range of movement. You can buy a lot of shares of AMD. At one point I was in 2,400 shares. And so I will stagger my buy-ins when I can so that if this were to move against me, say in this line, I've got much less on the line. My stop loss would have been right around here. You know, I would have let it tag over down below here and then come back up. But once it reaches this point, it's no. So buy in, come up, and in 3 different cells, I completely bought out. I was completely out up here after this cell. And then it comes down, it gives me another opportunity to buy in. And that's really what AMD did. It kept giving me great opportunities to buy in. You see all these little arrows and you think, wow, he was out of plan. No, I did AMD completely according to the strategies as outlined in the book. So we bought in again here when we were given this opportunity. And it comes up. And now it's having trouble keeping this resistance line, and it breaks above it. So we come up here, and I go ahead, I take a very partial profit, 400 shares. I had 2,000. We have trouble over the next 2 minutes going any higher. So I go ahead and take out another 400. Then we come up, we break to the high. I stay in. I want a big run out of AMD. I'm actually expecting that it's going to get up around what I'm hoping for eventually is the 1650. If you look at your range here and you look at your range there, that's your price target. So, but I fully intend to make money along the way. It's giving me this wonderful pattern-filled advance. Sure, what I'd really rather have is a beep, straight shot up, but I can make money on this. Why? Well, this is not really a pattern right here. So why am I buying in here? Because that's what I did. Price came up, came back down, and again, it's right here. It's having trouble at the same point the others do, and I bought in more shares. Why? Well, because I'm already in the trade. I'm not chasing the trade. I'm not out of the trade and getting back into it. I'm still in the trade for 1,200 shares at this point. So buying in another 400 is what we call averaging up. So if this was my buy-in, that's my break-even. Once I buy these shares here, my buy-in moves up to maybe about here. Maybe about here, because I only bought 400 shares. So I'm averaging up. I'm moving the average price I paid up. What happens to my stop loss? My stop loss comes up too. So I'm not risking any more money, but I have the potential to gain more money. So this is a non-aggressive play that winds up making us money. We are obviously going to do this. So at this point I had a stop loss above my break even. I was going to take profit if it fell. And we go ahead, we start back to the up. Great. I had a profit target right here that was kind of in the point where we'd started the triangle that I wanted to take some profits at. Actually I had it here. we had trouble getting there, and I went ahead and pulled the trigger on 400 shares in this candlestick. And then what do we do? Well, we started making, you see what this is? This is a bull triangle. Here's the flat, here's the slope, and we come down, and I buy in. Wait a minute. There's not the 1, 2, 3, because we're still in the trade. This was only a 400 share buyout. I'm still in the trade. My buy-in is still back here. I'm sitting on lots of profit. So again, my stop loss about here, shift my stop loss up. Buy in 400 more shares. That shifts my break even up. I'm averaging up. I'm not risking any more money, but I'm standing to gain more money. This is the situation we look to get into. All right, stock goes up, finds that resistance line again, comes back down. Didn't buy in again here. Did not buy in again here. At this point, I think I was in it again for 1600, and I'm happy, just seeing where things go. So comes up. I could have though. I absolutely could have bought it here, but again, that's a personal choice. You're not required. We're not that rigid. Comes up, and it does break above the line. Now this is what you're expecting, and this move here would not have gotten us to our target, but it would have gotten us maybe to the next level where we see another pattern that gets us the rest of the way, right? Okay, so we come up, I take some partial profits here. Remember, I bought in here, you know, I want to sell out again here. Drops down to the resistance line, which has now become a support line, and I buy in again. Now, Will, why did you do that? You don't do that. It broke up and now it's out of pattern. Well, it may be out of pattern here, but it's still in my plan here. Again, I'm in shares. I sold out shares up here. I bought in some more shares down there. That's profit, baby. All right, goes up. It can't really make a new high. Comes back down, and I went ahead and reduced my position size. Basically, I sold out what I'd bought in here. And no, that's not at all what I did. I'm lying. Came down, and what I had done was I had taken my buy-in point and I have moved my stop loss. Why? There's a reason. Once we had trouble at this point, what does this pattern start to look like? It certainly behaved like a bull triangle. It gave us what we expected, but once it had trouble at that level, now it looks like an ascending wedge. And where do ascending wedges break? They break to the down. So what I did was, we had this area which could have been consolidation before going back up. I set my stop loss just below it so that I could take all the profit I could if this in fact wound up being, actually somewhere right in here, had to have been about here. If this wound up being the entry into an ascending wedge, I wanted out because I didn't want to sit through the down. This could have been a reversal of the trend. It hit my stop loss. I was out. Of course, my stop loss in this case is still way above my my entry point. Now, what I gained out of all this was over $200. Of course, there was quite a bit of commissions in this. It was something like 260 or so before commissions. Why? Look at all these huge runs, all these profit points. Yeah, look at the scale. This is 1 cent. Joop. This is 2 cents. Joop. This is 5 cents. In reality, we are not taking, this price action is not taking place over the giant span that it might have seen when I was zoomed in. If I had got to my 1650, this would have been a $300 move. As it was, you know, it was an over $200 move. And with this, where I'm really happy with is just, you know, and obviously I was in the zone because I'm just spot on my buys and my sells. But yeah, I worked this trend just exactly as our strategies dictate. So, okay, enough patting myself on the back. Let's look at Twitter. So Twitter was also good. So Twitter, I come in. Twitter has started making an ascending channel. So, okay, ascending channels, just like ascending wedges, are going to break to the down. So that means I need my confirmation along this resistance line. So it comes down, it goes up, there's 1, down, up, there's 2, down. Well, you know, at this point it got real close. Sometimes, you know, if it had only got like here, no. This though, that's close to the line. You call that, because you know this could be really more of a wedge. You call that, that's a point of contact on your support. Back up to resistance. This is my 3. 1, 2, 3. So I sell short, and I go ahead and come down here. I'm having trouble at my my line of support, breaking it. Now again, these are advanced patterns. You don't want to be in this pattern when it starts up. Why? Because it's going to top out above your buy-in point. You don't want to be in that position. So I went ahead, I wasn't in for much, maybe 400 shares. I went ahead and bailed on this candlestick. It did follow line of support, and then it did break down, gave a short breakdown. I missed out on this, that's okay. On channels and wedges, you have to go in with the feeling you could well miss out on the breakdown. As long as, you know, if it's a good, you know, decent range and you can get some profit. I made 34 bucks on this drop, that's fine. If you can make a little bit of profit, do it. If it had gone back up, I'd have done it again. And if it had let me, I would have been in on this drop. But I would rather be out with some profit than in a situation where I'm still in the position and I'm riding it back up above my break even. Because at that point, it hits the line, right? It's still in pattern, right? And then all of a sudden, no, it's going against pattern, and I'm already, you know, more than 10 cents above my buy-in. Holy crap, you can suffer a big loss fast. So wedges, channels, not the best patterns to trade unless you're in the right mindset. Here I was. Here I was not. This morning I should have done chamomile tea instead of coffee. But I did get myself back under control. Money-wise, ended the day profitable. Still doesn't make up for the crappy week last week, but we're on the way. And I'm happy. 3 trades, one loser, 2 winners. The loser I deserved. And the winners I also deserved. So if you look at it that way, I got what I deserved, and hopefully I deserve more tomorrow. See you guys then.